Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is Brad Beauchamp. Brad, you want to start off by introducing yourself?
Sure. My name's Brad Beauchamp. I'm with Coast to Coast Mortgages, and they're based in Jacksonville, Florida. That's where my broker is. I am a Canadian, and I live in Vaughan, Ontario. Born in Toronto, lived there all my life, and I have gone through the immigration process just like everybody else, or many people that are getting different visas. I had a L1 visa, which is an executive transfer visa, for 4 years. Then I had a green card for 8 years, and now I'm a U.S. citizen, myself and my wife and my youngest daughter. And I go back and forth between West Palm Beach, Florida, and Vaughan, Ontario. I've been a mortgage broker for 5 years.
For people who are just like that went through a little. For people who just heard you say that and you said L1 visa, what's an L1 visa?
L1 is an executive. My brother has multiple companies in the United States, so I transferred myself to the U.S. to his U.S. company.
Yeah.
As an executive, because I was an executive, or I am an executive in his company. So I transferred myself to the U.S. company, and that was fairly quick because we had all the paperwork, and the company had been up and running for 10 years. So it was easy for me to get the paperwork, and I got approved fairly quickly.
That's awesome. I had the E2 visa, and honestly, the hardest part was building the business plan after. Actually, once it was ready to submit, I had my visa in my hand, 2 months later. The hard part is just all the prep work, but actually once you submit it, depending how fast the government's working that time of year.
Anyway. Yeah, for sure.
Anyway, let's go back on the topic. But Brad, so you're doing mortgages down in the U.S. I have a lot of Canadian listeners. Let's just go over mortgages. Can Canadians actually do this? Can they go get a mortgage down in the U.S.?
It's actually, there's so much opportunity in the U.S. and people would think that, how do I get a mortgage? It is easy to get a mortgage in the U.S. They have many products. Many lenders have many products that are geared towards international investors or people moving to the U.S. So it's not that hard. It's even easier for investors because, as you know, Glenn, you can get loans there that are just based on the value of the property or the income that the property brings in. And you don't need a credit score for those loans or proof of credit score or proof of your job. It's just based on the asset like that. So it's not as hard as you think, and there's less paperwork. It's not, these investor loans called DSCR loans are not full doc loans. And people would say, well, what is a full doc loan? That means just like in Canada, when you're applying to RBC or TD Bank, and they're asking you for everything, including the dog and the names, the mother's name and the dog's name. They just need very minimal, which would be a passport, proof of funds, whether you're closing in a U.S. entity, which a lot of people you've had on your podcast before, they should have an entity instead of their personal name. Because they're personal, if you close in your personal name, it's a tax flow through, and you could be double taxed.
Yeah.
But it's not as difficult as you think. You just need to work with somebody, whether it's me or anybody else, doesn't matter, and find out what possibilities are, and make sure you have you need the down payment, and then you need the closing money for closing expenses. So I call it a slush fund. But a little bit of extra money. You can't have exactly $20,000 if it costs you $22,000 to close. You have to have extra money to make sure that you have enough to cover your obligations.
Well, it's real estate, right? Stuff breaks.
Yeah.
Roofs, break down over time.
Yeah.
And honestly, it's for the lender's protection, but it's also your own protection. You're going to be in a tough spot if that's your last dime in there. Anything happens, stuff happens. One thing you just said in there was that when Canadians are applying for mortgages in the U.S., they don't need a credit score. You kind of talked about that, how it was like a non-full doc loan. But so for some people, there's like wondering why don't they need the credit score? And if I got a credit score, like say on my I-10, would that help at all?
Yes, it would. I mean, if you have usually it takes about 2 years to establish a FICO score, which is a credit score in the United States. And if you have that, they'll pull your credit. And if you have a tax ID number in the US, Social Security number, usually it's for 2 years. That's the key. Then yes, you could get a lower, you could possibly get an increased loan to value and a lower interest rate. Yes.
Okay, so now since we're talking about getting lower, better leverage, lower interest rates, is there any other tips that would help someone, try to get better numbers?
I just think, well, a lot of people call me and they have this idea
Yeah.
through yourself or other people that are educating Canadians on investing, but they're starting from scratch. So they're just a Canadian, so they don't have any ID. Of course, when you get ID and you're more established and you have a residence or something like that in the US, all of those things are beneficial. The more things they can look at, you can help your position regarding the negotiation of the terms of a loan with a lender.
Makes sense because like the way the lender's looking at this is they're just evaluating risk on this deal. And
Yes.
then if you can lower the risk by like you're saying, showing residency and address, maybe a driver's license, maybe
Yeah.
something in the United States, the more you have, the less risky it's going to be, and probably even the way your numbers are. Is there anything in the numbers that would help, like, different, if you're doing like say a renovation loan, like having I don't know, higher or lower renovations based on the purchase price of the house? Is there any other ways that you could make this easier for the broker for yourself to actually get this loan done? Are you looking to invest in the US? Are you looking for a coach that has been doing this for much more than 1 year? In fact, doing this for almost 10 years? Do you want to do one-on-one calls? Do you want to actually have someone looking at your deals and actually thinking and worrying about your projects? If that's of interest to you, I'd love to get on a phone call with you. Go to glensutherland.com or at canadianinvestingintheusa.com and schedule a call. And we'll just do a quick 15 minutes, see if it works for you.
Um, I mean, a lot of people they want to hide. People some people call me and say I have $20,000. I want to invest in the U.S. Like it's just not enough. You need a reasonable amount of money like that, and you could help yourself by maybe going into a deal with another American, for example. That would be beneficial. If you're Canadians and you're all Canadians and have no status, no nothing, that would be the worst case scenario. You can get a loan, but the rates would be the highest, and the LTV, like as you said, everything that helps. Whether you're doing it with, you could do it with an American, you could partner with them. I know I've heard that before, where other people say, could I partner with an American? Would that count like that? A lot of times the lenders will default to, or is everybody an American or just some people? Yeah, is the entity together? What is the percentage of the entity, the ownership of the entity, and who owns that? So there's a lot of variables. Yeah, I could go on and on about the variables, but like that, but there
That's
is
the
ways
risk too. Like, so,
yourself.
because I have I've had that situation with one of my students, and they had to change percentage ownerships
Yeah,
because they were working with an American, and the bank wanted to make it safer. So, for the Canadian, they were taking a lower stake in the company,
yeah,
but that was, they were funding, the money to it in a lot of cases. But the person in the U.S. was the one qualifying for all the loans and managing the property, and that can, you better trust the person you're working with.
yeah. I mean, it came up this week with me, and it. I'm not an attorney or anything else, but if you're lending the money, you better make sure that you're covered on the risk, especially if you're signing over. The American is going to have the risk is going to be on them or on the loan documents, but still, you're giving all the money up if you want to invest with someone like that. So you just better make sure that the agreement is tight, or you're covered on the paperwork for sure.
Yeah, yeah, and depending on how you're doing this, if there's just to throw some more tips out there, if this is an all cash deal, for instance, and maybe this is going to be you're using the American for the refinance or something, you could even protect yourself by registering a private mortgage on the property, so you protect your 50 or 75,000, whatever you put into the property to buy it, protect your interest on the property so that at least you get that back.
Mhm. Yeah, for sure.
Anyway. Yeah. So what else? So Canadians can do these mortgages. What other tips do you have for Canadians or things that they would be helpful for them buying stuff in the United States or things you see that are common problems maybe?
For sure. I mean, I've had people call me that have been investing in the US for some years. I even had a couple recently. They've been investing for 10 years. They're in Toledo, Ohio. They have everything in their own personal name. It's pretty problematic for them, of course, as you know. And you preach all the time like that. And then now they're living on they're buying houses and they're maybe renting them for $1,000 a month, and then they don't have any mortgages because they bought it for 30 or 40,000.
Yeah.
So I mean, there is a way to build up your equity in cheaper or less inexpensive properties in the U.S. There's definitely that ability,
Yeah.
more so than Canada for sure. But you just got to be really careful. I know you always talk to your clients and your followers about structure. Structure is really, really, really important just to protect yourself, and about taxes later on, about liabilities. Americans love to sue, of course.
Yeah.
And so you got to be really careful. But if you talk to me about the uh, uh, actual transaction, I'm sorry for
Yeah.
sort of
Okay.
actual transaction, then you need to be careful. There is other people out there, and he helps people put the structure together. I think you do some of that too, do you not?
Yeah.
Yeah, there you go. Yeah, so there's people out there, very trusted people like Glenn, that'll help you put the structure together. That'll make sure that you're covered and like that, and ask you fundamental questions that you're not used to. Because you guys got to remember, this is a different animal, the U.S. The opportunities are greater and the market's 20 times bigger. As you know, it's easier to get money, as we're all talking about, but you got to be careful. You got to, team with somebody like Glenn that is helping you, that's been through that, that's done many transactions, and they can help you put the deal together and cover yourself. It'll be well worth teaming up with someone, whether they have classes or whether they charge you a fee. It'll be well worth every penny doing that.
Yeah. I even work with some of the students, like actually on projects because sometimes they just want to learn from watching rather than
Yeah,
learn
yeah,
from learning.
yeah,
Different
absolutely.
kinds of learners anyway. One thing you said there, we were talking about a Toledo couple that had a bunch of properties in their own name.
Yeah,
What said it was kind of problematic for lending. Was it just to be able to show like the income, or was it all the liability that was the problem?
they, this one couple owns 10 properties. They're from Toronto.
Yeah.
They own, and most of the houses they bought many, many years ago for 20 or 30 grand. Now they're worth, say, about 100,000, for example, and they wanted to do cash outs
Right.
to buy more properties, which I understand, but it's still everything was in their name. It's easier to a lot of DSCR lenders. So DSCR, just so you people, clients know, is debt service ratio loan. So to service the debt on the loan they're giving you, what is the rent? Does the rent cover the expenses? And if it does, 1 to 1, in other words, $1 of rent, is it covering $1 of the mortgage? If it does, you can get a loan. But a lot of these lenders, they'll only lend you in it to an entity, to a U.S. entity. So in your own personal name, well, you have no connections. You're Canadian. So if you close in your own name, they're going to go like, I don't know you. You don't have a credit score here. You don't have an entity. They're not protecting themselves. So almost everybody, there's a few lenders out there that'll let you close in your personal name, but most of them will want to lend it to you. If you're an investor, you have to really have an entity because that's how you're going to get a loan.
Yeah, that makes a lot of sense. And like even, I'm always trying to solve people's problems, but when you get into those situations, sometimes where people bring me problems where they've already set up stuff and then they're
Yeah.
like, Glenn, fix it, which is much better to just do it right off the start. But you could
Yeah.
deed those properties into your entity, pay all those transfer fees to do
Yeah.
so. But the thing is, a lot of times then your seasoning period will start over for like a lender typically to do, you're talking about cash out refinance. There's typically a seasoning period of like 6 months with most lenders, correct? If you're a Canadian interested in U.S. real estate, there's a 60-second quiz that will tell you the safest strategy based on your specific situation. Because here's the thing, there isn't one way to invest in the US as a Canadian. The right move depends on your budget, your risk tolerance, and what you actually want to get out of this. Most Canadians I talk to are stuck in the same spot. They know the US opportunity is real, they've done some research, but they're sitting on cash because they don't want to guess their way through setting up corporate structures, cross-border taxes, and picking the wrong market for the first deal. The mistake isn't lack of information, it's that generic US investing advice doesn't account for your situation as a Canadian. It doesn't account for your capital, your timeline, and your appetite to be hands-off or hands-on. So we built a 60-second quiz that gives you a personalized answer. Which US investment strategy fits you right, whether you're actually ready to buy or what to fix first, and the smartest next step based on where you're at. It's free, it takes about a minute, and you'll get a customized game plan at the end. And it's not a generic PDF. Go to a CanadianInvestingInTheUSA.com/quiz. It's also linked in the show notes. Take the quiz, get your game plan, stop guessing. You don't need to figure this out alone. You just need to know what your next move is.
Yes. Yeah. 3 to 6 months. I mean, you can do it I have somebody that's going through right now, a Canadian. He's a builder from Toronto and he owns a property in Nevada and Las Vegas.
Yeah.
And it's his name. And I was on a call with him with an attorney and stuff like else. And he's going to have to pay those fees and he's going to set up a new entity in Wyoming and he's going to do a quick claim basically and buy the property in Nevada.
Yep.
It's a condo in downtown Las Vegas, for example, like that. So there is ways to correct it, just like Glenn says to the listeners here. There is ways, but you need to get someone who's experienced like Glenn to help you set it up properly at the beginning. That's always the best way. Or if there's some issues, the way it's set up now, there is ways to fix it. There's going to be some cost involved. You know, a lot of Canadians don't realize. When you're borrowing money in the US, you're paying to borrow the money. A lot of people say to me, "Oh my God, I didn't know about all these costs." Well, it's not like Canada where the bank is charging you nothing and then you just you're paying for a lawyer to do all the title work and you're paying other than that, in the US there's a lot more fees. So you have to be aware of the fees. Please, that's one thing I would tell everybody. There's fees involved in changing the title and registering the title, setting up the entities, but in the long run, you'll be ahead by doing it properly and setting up at the beginning.
Yeah, well, even still, like if you're doing a loan with even you or whoever, you're going to see like the lender, which is not necessarily you, it'd be the actual lender of the money, not
Yes,
the broker.
correct.
You're more of the broker in this situation, but like
You're
there'll be
right.
like, underwriting fees, loan origination fees,
Yeah.
all these fees that come in. And it is one of the biggest sticker shocks that Canadians get because they're not used to seeing fees at all. Why doesn't Canada have fees? The bank doesn't charge these things?
Those fees are um, there's fees here in the U.S. that aren't in Canada. And some of those fees are incorporated in the lawyers' fees in Ontario, for
Ah,
example.
so
So
they,
they're there, but they're buried. But there is more fees here. This is the U.S. So and everybody is trying to make money on different types of services, of course, right? So
yeah.
it's just set up differently. So please be aware of that, you guys. Like you can't go and borrow. Like, I'm doing a refinance for somebody right now, and the fees ended up. They want to borrow $800,000, and the fees came out to 30,000. Just for example, they go 30,000. People were going, "Well, how about 30? I have to pay $30,000 just to refinance my mortgage because they had a mortgage of 9%, 9.5%, and
Yeah.
now I can do the mortgage at 6.5%, for example.
Yeah.
So I mean, there's a cost of doing that, of course, like that, and they want the advantage of lowering on a refi their interest rate, but they don't want to pay any fees. That's just not the way it works.
Yeah. And then even still, depending on what kind of loan you set up, you might have fees to break the original mortgage as well.
Yeah, and that's called the prepayment penalty, guys, just so you know. When you get a mortgage, there's always generally a prepayment penalty for you. It's just like Canada, but I don't think you can get out of it, but in Canada at all. But you can, usually the prepayment penalty drops off after 3 to 5 years. It can be 1, 2, 3, 4, 5, but generally the term is 3 to 5 years. After 3 years, the penalty completely drops off. That's the good thing for investors in the for Canada when or from Canada they're buying the U.S. Once eventually the fee drops off, there's no penalty to refi your mortgage. So there is some great rules here and laws that help Canadians and investors invest in the U.S. So you really need to team with someone like Glenn to be aware of those advantages, especially if you're just starting out and you're investing in the U.S.
And it's about planning the project correctly with the correct loan as well, because if your plan is to refinance in 6 months or a year, like
Yeah,
I'm gonna buy this property, I'm gonna get the cheapest interest rate on a purchase loan, and then I'm gonna put some money in my own end and then refinance in a year or 6 months
yeah.
because I have, I just have a seasoning of 6 months, say, on the loan or on
Hmm.
the property before you can refinance. The thing is, you might have a massive break fee of say 5%, or I've seen some of them even at 7%, if you want to do it in the first year. And so, it might make more sense to pay like an extra percentage in interest rate, which works out to like $40 a month. It could be, and instead of
Yeah.
paying a massive fee. So a lot of it's just planning. It's all numbers and planning. And the thing is that a lot of Canadians just don't even realize how a loan structure works, how the corporate structure works, and what's going to be compliant for Canada Revenue and for depending on what your situation is. If you're planning on living in the US or planning on living in Canada, it's going to be a different structure. Like we really go through 5 different structures, and it's putting you in the right box depending on where your income's coming from. If it's like T4 income, investment income, if you're retired, you're going to set this up different because you want to you're setting a whole thing up, so you want to take advantage of both countries the best you can to take advantage of the two things. And you know sometimes you're like, hey, I can take this and make a lot of money on the rental real estate, but if you're paying it all in taxes or exposing yourself in liability, didn't make any sense.
It just you guys just use professionals. Have a cross-border accountant, Canadian and U.S., of course. Then you have to have a coach, for example, like Glenn. And then you a mortgage broker. A mortgage broker, you guys, you got to remember, a mortgage broker is just telling a story. That's all they're doing of what the circumstances are. Here, I have a client. Here's the structure. Here's how much money we have down. What are the rates? Then you come back, you get multiple offers, and you come back. Or what I do is I come back to the client and say, here's the best deal that I can see at the moment, and here's the terms. Are you okay with the terms? Do you want to change the terms? What about, like you just said, what if we change the payment? Because my intentions are I want to flip. I want to do a fix and flip. I have a lot of clients buying in Ohio, as you know, even Niagara Falls, New York, Alabama. 50% of my loans are in Florida, but of course, I'm licensed in Texas and Florida also. And Texas is a great state. All of the red states, you guys, that don't have taxes, you can set up entities, and there's like 7 or 8 different states, for example, like Nevada, Wyoming, Delaware, to set up LLCs. And if you just Google it, you can see what advantages there are in setting up an entity in this state and that state. There's lots of charts out there that'll educate you on where to set up the entity, or you get coaching and how to structure it. So just reach out and ask people to save you guys time, and you're not wasting your time and making mistakes. Cut the mistakes down, but I encourage everybody to invest in the U.S. for sure, because it's definitely an opportunity, and it's getting greater by the moment.
Yeah. Oh, that was great tips. And like a combination of the two last things you said is, go do your own research and then get someone professional to set this up. And when you
Yes.
do those two things together, you understand what they're saying when you're having these conversations, because sometimes it just might not align with what your future plans are. And if you understand, each state and understand what's going on, or have someone looking over your shoulder and saying, that's not what you're talking about. You had something different you wanted to do in the future. This might not work out. But anyway, those are great tips. Putting the two of those together is gonna make sure you're successful. Brad, this is a great interview. I think there's a lot of good tidbits out of this whole thing. I want to make this easy for everyone to get a hold of you. So anyone who wants to get a hold of Brad, just go to glensutherland.com/lenders or at canadianinvestingintheusa.com/lenders, and you can get all of his information there.
So I'll answer back promptly for sure.
Awesome. Well, Brad, thank you so much. Tons of information. Like I said, I think a lot of people who were just wondering how this mortgage stuff works is going to have a much better idea. Everybody, thanks for tuning in. Thank you so much, Brad.
Thank you for the opportunity, Glenn. Have a great day.
That was a nice video. Bye.